Hey, good morning, everyone. It's Matt Donahue with Mission Financial Planners, and this is your weekly market update. Today is Monday. What day is it today? The 21st. It's Easter Monday. I hope you all had a good Easter weekend, and we're ready to jump back into it. So let's take a look at last week. Some of the numbers that came out last week showed us that the economy is resilient, but not necessarily bulletproof. Retail sales were up about 1.4% month over month. That's the biggest pop we've seen in over 2 years. A couple key factors behind that. One is auto sales jumped 5.3% because people are buying cars to beat some of those looming tariffs. Apparently, no one wants to pay more for their SUV or minivan. Housing starts hit 1.32 million annualized, not booming, but still moving, especially considering how high mortgage rates still are. But industrial production dropped 0.3%. Manufacturing and utilities took a breather. What does all this mean? Well, the economy's not running hot, but it's not running cold either. It's just moving along. This week ahead, watch the data, not the drama. PMIs, that's your real-time pulse check for manufacturing and services. We have home sales coming out, and then durable goods orders. That's a proxy for business investment and confidence. In a Why are those numbers so important in a policy environment like this where it keeps moving? Data is going to be your best compass. So you want to cut through the noise. You want to actually look at the numbers as they come out. Thought of the week, the earnings per share mirage. Markets are supposed to be forward looking, but right now, earnings projections are still built on yesterday's news. Consensus earnings projections are calling for 7.1% earnings per share growth in Q1 of 25 and 10% for the year. Now, that sounds great, but that's also ignoring the potential impact of tariffs. Tariffs behind the scenes are going to make it difficult for businesses to hit those goals because costs will go up, inflation will go up, demand will slow. It will also squeeze margins for them. Add it all up, earnings per share is under pressure, and yet analysts haven't really moved their estimates yet. So as an example, since January, they've dropped by 2.5%. Now, you could look at that as optimism, you could look at that as denial. Regardless, companies aren't buying it. They're withholding guidance, hedging their bets until policy firms up. So what do you do in the meantime until this picture becomes a little clearer? Focus on the fundamentals, quality, diversification, and long-term planning. That's what we need to make sure we stay focused on. Wisdom for the week. We have Epictetus this week. We also have Abraham Lincoln. So it all kind of comes back to a Marcus Aurelius quote. We must discover the missing art of ascent and that our impulses serve the common good. Remember, Marcus was an emperor, okay? He actually was running the whole Roman Empire, and he did it for about 20 years. His mentor was a man named Epictetus, who was a former slave. It's a powerful reminder that wisdom doesn't come from titles, it comes from truth. In uncertain times, acting on fear or ego doesn't help you, it also doesn't help anyone else. The same goes for financial planning. We don't chase noise, we stay grounded. As Abraham Lincoln respected Frederick Douglass, yet another statesman who respected a former slave, we should respect reality wherever it comes from. Smart tax move of the week, how to pay your taxes like a pro. So there's a lot of different ways you can pay. Check out our blog post this week at missionfinancialplanners.com. You'll see a much more in-depth version of this. But there's essentially 7 or 8 different ways you can pay. You can do electronic payments, you can do checks or money orders, you can do debit or credit card. There's actually, and I didn't know this until this week, there's actually an option where you can go to the 7-Eleven and pay up to $1,000 a day. I didn't know that was a thing, but apparently it is. You can go to an IRS office, just know you will need to make an appointment. You can do installment plans if your debt is under $50,000. Offer in compromise. This is for real hardship. This isn't just because, hey, I'm trying to stall for a little bit. Offer in compromise means something seriously happened to you. And watch your passport. If you owe over $50,000 and you don't have a plan, the State Department can ground you. So don't forget estimated payments if you're self-employed. Pay quarterly or you're going to pay some penalties. And yes, you can even pay those at 7-Eleven. Is it weird? Sure. Is it convenient? Yes. We're going to continue our Social Security spotlight this week. We're going to talk about living to 95 or later. It's not really science fiction anymore. And Social Security is a great hedge if you think there's a good chance you might live that long. So in a nutshell, here's a strategy you could think about. Delay the higher earning spouse's benefit until 70. So if you're a married couple, whoever made the most money, wait till 70. That locks in the highest survivor benefit permanently. Okay, so whoever's the last person standing, they're going to get that bigger benefit for the rest of their life. And then claiming early cuts, claiming early cuts down all benefits permanently. So one way to look at Social Security is almost like insurance against outliving your portfolio. It's not just a government check. Think about it like a strategic asset. So a couple final thoughts for you. This week reminds us markets are messy. Fundamentals still matter. Tariffs are more than headlines. They do hit margins and growth. Long-term investing will beat short-term guessing every day of the week. Taxes don't disappear. Make sure you plan for them. And Social Security isn't just income. It can also be resilience. And as Epictetus said, control what you can. Stay steady, stay grounded, and please don't pay your taxes in loose change at a gas station. So until next week, stay sharp, stay ready, and let wisdom be your edge. Thanks, everyone. Have a great week. Bye-bye.